Hola guys, what's going on? This is Hala Pablo. Welcome to another update on crypto. Today we're going to be looking at some privacy coins, in particular Zcash, and the news that has recently come out about the possibility of Zcash, Monero, and Dash being delisted from an exchange in the Seychelles Islands. OKX is the name of the exchange, and they're talking about delisting it. There's a little bit of a scare going on. And guys, this just plays in to everything I've been talking about all this year. If you've followed our series on traumatized tokens, these three coins actually were... we went over it. I went over those three coins, particularly Zcash, Dash, which stands for digital cash, and Monero. Privacy coins that have wound up in the crosshairs of not only the Security and Exchange Commission of the United States, but also globally as other countries, in this case, China, the founder of OKX exchange is Chinese, have sought to create their own central digital banking currency. So the United States is not the only one prepping to roll out their own Fed coin, but every major player in global economy is also considering CBDCs and, implementing their own CBDC form of currency, government backed by their government. And so what poses the greatest adversarial threat to this movement is decentralized currencies, such as, Monero, such as Zcash, such as Bitcoin, such as XLM, and so many others that we're going to see come out on the chopping block with the threat of delistment from centralized exchanges. You got to understand that we're in a very interesting time in history with the advent of decentralized finance and currencies and such. And centralized systems, such as the governments of the world, are sort of in a tailspin right now what to do with it, because it threatens the hegemony of their own centralized fiat banking systems. And so we're going to see a lot of stuff going on right now, and especially in the year, I think 2024 is going to be very, very volatile in the beginning. And all of this is done and has been orchestrated to sow distrust in crypto. This is what I believe. They cannot get rid of it altogether because no one government owns crypto, right? It's decentralized. It's global. It's run on blockchains, on people who make purchases on blockchains, and all of the activity is done on the blockchain, which does not have a centralized controller, if you would. So that's obvious. That's the whole reason behind crypto and Bitcoin to begin with. And so all of these decentralized aspects going on scare the hell out of the governments that want to control. This is obvious, right? So I don't need to labor on this point. And so since they can't get rid of it because it's on a blockchain and it is ubiquitous, it's as ubiquitous as the internet, as the World Wide Web, what they can do is ban or delist certain currencies, certain digital currencies from being transacted. So this is what we're seeing. Now, the ones that they're really focusing on and going after are, like we talked about in the traumatized token, are the finance coins, because these are the ones most relevant to the CBDC. So we see here Zcash and Monero is on the chopping block for delisting. Okay, because they're privacy coins. Zcash is very similar to Bitcoin. In fact, it's the same total supply of 21 million. It is written with the same code, as far as I know, and the difference between Zcash and Bitcoin primarily is that Zcash has this shielding or this cloaking feature where the transactions can be done privately, hence privacy coin, whereas Bitcoin, it's open. Everyone knows if you're paying Bitcoin or receive Bitcoin. But not the same with Zcash, although Zcash does have a feature where you can unshield it. So it can be shielded or unshielded. Nevertheless, it can be used as a payment coin, as a payment fee. People can transfer their CBDCs into Zcash or into Bitcoin or into Monero and pay their bills. So you get paid a stimulus check, say in CBDC and USD. You can go ahead and make you could buy stuff off Amazon or whatever, using not the CBDC, but you just transfer it into Zcash or Monero or Bitcoin and use that. And this is a big red flag for the government. So they're finding a way how to mitigate this. And right now, we see that OKX, which is a prominent player in the crypto arena. Now, this is not an exchange in the United States. This place is located in the Seychelles Islands off the coast of Africa in the Indian Ocean. It announced its decision to delist 20 spot trading pairs, including top privacy-focused cryptocurrencies, Monero, which is XMR, Zcash, ZEC, and Dash. And so it's set to take effect next year. Now, guys, this coincides perfectly with what I've been talking about. We need to form another bottom in this accumulation range, in this Wyckoff range that we're in right now. This is a Wyckoff accumulation. This is a bottom that we're in. We've already seen one bottom, which in Bitcoin, if we speak the language of Bitcoin, that would have been around 16,000. And then we've had the counter trend since then that's gone up. Let's see if we can put this on Bitcoin here. I can show you what I'm talking about. This is really, really important that you guys understand this, okay? So we had this bottom here, say like here, this area, the 16,000 area that we had back in November of 22 of last year. And for many people, they thought this is it, and it's up from here. And indeed, we've had a rally since then, where the trend has been bullish, been extremely bullish, right? It's been up, 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 and it looks as though we're set or poised to regain the previous high. We're just on course for that. What I am contending is that this is a counter trend. We are still in a bear market. We have formed one bottom, and we are now trending upward to peak out at somewhere around 48,000 is where I would place it. I don't necessarily think we've topped out, even though this is definitely looking bearish. This is looking like a top, but it's a top within the counter trend of this rising channel, or this rising wedge. Actually, it's a gigantic wedge, rising wedge that will eventually top out, perhaps mitigate this point here, this 48,000 point, mitigate this, and have a steep sell-off back down to, in essence, create this double bottom on the macro. And so this would serve as a liquidity generator for the market makers. So they know that in here, there's a lot of FOMO being created. There's a lot of FOMO, people jumping in, especially the higher we go, the more inclined newbie investors, people who don't understand market psychology or Wyckoff, or haven't taken the time to study the accumulation schematics and look at the VSA, are inclined to buy in. And what they're going to do, the market makers have already determined that they've pre-designated a sell-off up here. And there's gigantic bear order blocks in place, like artillery to just shoot down any price that comes higher than wherever they've deemed the top to be. Let's say it's 48,000. And so it's not going to rise. There's just a battery of bots programmed to sell at that point. So retail weekend investors are not able to lift the price above that without getting shot down by the institutional order flow guys. So they're going to get shot back down and create liquidity. They're going to be bag holders up here that eventually are going to capitulate. The market makers are going to generate all the liquidity up here, selling their bags that they've bought down here. And the reason of it, the grand scheme of it, is to rebuy it again as we mitigate when it gets to the bottom and remitigates the prior lows. Now, I'm not saying we're going all the way back down to 16,000. I'm not saying that. But I do think we're going to revisit the 20s at some point. And who knows, perhaps even lower. And there, the market makers will be buying very aggressively and establishing their positions very deeply for the bull run, the real bull run, the macro bull run, which will take place sometime later next year. So that is to look. And they're going to use the liquidity that they generated here to buy here. So this is nothing but a liquidity generator. This is a counter trend. And then if you look at it on the macro, let's go out to a higher time frame. Let's say like, let's go out to like we'll even go out to like a weekly. Okay. So then this, in essence, this area here is in essence this. So every time you have a buying climax on the macro, we see this top. We know this is a top, like this was a top. There usually comes a counter trend after a period of lateral consolidation that doesn't mitigate, it doesn't quite reach the prior highs before we have another sell-off and it comes back down. See, here was the second sell-off here. See, back then, back in 19, I remember because I was trading this, everyone thought that we were going to exceed the prior high that they had in March of 18. Or was it? Oh, it was in October of 17, the 19,000. But it only went to 13,000, and then we had another sell-off, and it remitigated the lows that it had bottomed out here. In fact, in essence, creating a double bottom. So there's going to be something like that. It's going to come back down. It won't go. It'll probably reach this point here, mitigate this, come back down to form the second bottom, have a period of consolidation like we saw here, and then sometime in late 2024, perhaps early fall, we'll begin the bull cycle proper, which will exceed. That's when we're going to get the $100,000 Bitcoin and all that. But that's not till way next year at some point. Okay. Until then, we need to have another sell-off. And this ties back into what we're talking about with the Zcash and Monero. All of this has been orchestrated for two things, for two reasons. Number one, it is to create FUD in crypto and make it look like it's super volatile, which it is, but it's engineered volatility by the powers that be to instill distrust and fear and doubt and uncertainty so that investors will be more inclined to trust CBDC, central bank digital currency, than decentralized crypto. Although, like we spoke about, they cannot get rid of crypto altogether. They can instill fear and distrust in it nonetheless. And so that is their reasoning to come back down at this point, which we already see the storm clouds gathering with the news of Monero and Dash and Zcash being slated for delistment on this one exchange. And it may seem that this exchange is not very, it's not a very important exchange. It's not like Coinbase. It's being chopped off of Coinbase or Binance. But nonetheless, this is a Chinese exchange, I believe. I believe the founder is Chinese. So you know that there is something going on. There's some kind of ingratiating factor for the Chinese government with their own CBDCs. And we know already that our own Securities and Exchange Commission has targeted many of these coins already and deemed them securities and has threatened right now there's threats swirling around and possible delistment even in the United States of certain coins, especially the privacy coins. So we know that's to come, and that would all jibe perfectly with the double bottom that we just spoke about that needs to occur, so that we could have this this major liquidity generator in preparation for the for the bull cycle. So let's go back to Zcash real quick, and I have it in the Halapao. And to show you, I'll go back to the 10 hours. So on the short term, what can we expect with Zcash? Zcash. Well, let's go here. All right. And then, so we had this downward. Zcash is really taking a beating. The good news is it seems to have found some stable support here at the what is this, the $21, $21.50 mark. With this, we have the selling climax in the sign of weakness in phase B, which showed the mitigation. But we've seen these double mitigations with the sign. See, this is another selling climax. This is a selling climax. The sign of weakness in B didn't come quite far down on this one, and on this one it came back to here. It was kind of like the same. It didn't quite exceed it, but then here we have this double drop off where it didn't exceed on the second one. See here how this one came all the way back down, this spring. So this would be like a UTAD, and then this would be like it would look like a spring, but then it would come back up to its own 0.5 Fibonacci line here. And curiously enough, if you anchor the VWAP to the selling climaxes, we see that the price comes up. You see how this is the anchored VWAP, this blue line, how it comes back up to the 0.5 fib in this range. If you take this selling climax, and this is the automatic rally top here. So we've broken structure, we've come out of it, but we've entered into another broadening wedge, a rising wedge, which we know rising wedges are bearish. So here we've bounced off the anchored VWAP and the TRM, or the 0.5 Fibonacci trading range midpoint, and then we had a larger than normal supply spike here, but it failed to go below break the 0.5 fib. So this to me is kind of like maybe like a sign of another potential rally up to TRS, which is trading range support, and then at some point we can come back down, and then we're going to break structure sometime next year, and we're going to come down deeper. This has to happen. This will happen, I believe. Not financial advice. Don't invest off of what I'm saying, but just know that this is entirely feasible and most likely what's going to happen. We're going to break this. We're going to come back down. And you see, Zcash is already at its lowest of the low, I believe. Let's go out to the 5-day and see. At least on Coinbase. I haven't looked at it on Binance, but Zcash is really taking a beating along with some other coins, and it hasn't looked like it's bottomed out yet. It could go even deeper, and it's most likely going to, since so many of these cryptos are indexed to Bitcoin and Ethereum's price action, that they're going to go down also when Bitcoin goes back down to remitigate the lows. But I don't think Zcash is going to fall that much further, and then when Bitcoin bottoms out, when it makes that double bottom sometime next year in the low 20s, then those that are enthusiastic in these privacy coins, I would buy the hell out of them at that point, because they're coming back, I believe. I believe these privacy coins are coming back. This is temporary, and that's what I want to get. That's the good news, guys. If we can get through this point and not be intimidated, just wait for the double bottom. buy it on the double bottom, buy aggressively, and then put on your helmet, put on your safety helmets, because we're going up. It's like Superman blasting off after that. But that won't be until later next summer. So we got some more bloodshed in the future, especially with the privacy coins, and then other coins we're going to be hearing about as we get closer and closer to the CBDC rollouts in this digital age, in this new age that we're entering into regarding finance, global finance. And that's all I've got for now. I know this went on. We went over 20 minutes. I haven't done a 20-minute video in a long, long time. But I hope that this was informative, guys. No nonsense crypto. You'll never hear me shill anything. These are all coins that I invest in my own, and I share with my Discord group. If you guys want to learn how to trade with volume spread analysis and Wyckoff, my Discord trading group is extremely affordable. It's $20 a month. That's like 60 cents a day. And you learn, I believe in teaching someone how to fish so you don't always have to give them food. So you can go out and get your own fish. You can go out and hunt, and you're not dependent on someone to feed you signals. So I don't believe in signal groups, but I can show you what I'm doing. You're free to piggyback at your own risk what I do. An even better option is to learn how to do it yourself. This stuff isn't rocket science, and it just takes practice. And so, if you guys are keen on doing that, and in preparation for the bull cycles that are going to come next year, you're not going to need guys like me. You're not going to need influencers on YouTube who may be, excuse me, biased and shilling tokens because they're getting paid to sponsor them. So you don't want to rely on people like that. So guys, if you appreciate this kind of this technical analysis, I'd appreciate a thumbs up, subscription, and that'll encourage me to make more of this and help more people. And then together we can just really prosper in the up and coming bull market of next year. All right, guys, that's it. If I don't see you, have a happy new year, and we'll see you in 2024. All right, guys, adios. Bye-bye.